Intel soars amid buyout rumors involving Musk and Qualcomm. Date: January 20, 2025. In a surprising turn of events, Intel Corporation's stock surged by 9.25% on January 20, 2025, following rampant rumors of a potential buyout involving industry giants Elon Musk and Qualcomm. This unexpected market reaction has drawn significant attention from analysts and investors alike, highlighting the turbulent landscape of the semiconductor industry. Market reaction and stock performance. The news of potential buyout discussions sent Intel's shares soaring, reflecting a positive sentiment among investors who are eager for potential changes in the company's direction. The stock gained 9.25%, a significant increase that indicates how market participants are responding to the possibility of new ownership that could revitalize the firm after years of financial struggles. Intel stock has faced a steep decline, plummeting approximately 69% since April 2021. The company has grappled with a myriad of challenges, including fierce competition from rivals like Nvidia, which has attracted cloud computing companies away from traditional CPUs to more advanced GPUs. This shift has left Intel's foundry division struggling to secure new customers, exacerbating its financial woes. Sources of the rumors. The buyout rumors were ignited by reports of private jet activity linked to Qualcomm and GlobalFoundries at Mar-a-Lago, the well-known resort owned by former President Donald Trump. Analysts noted that this unusual activity suggested potential business negotiations were underway, fueling speculation about a strategic move involving Intel. Paul Gelsinger, Intel's CEO, resigned earlier in the week, adding to the uncertainty surrounding the company's future. His departure has left investors questioning the company's leadership and strategy, intensifying the focus on potential buyout talks as a means to navigate Intel's challenges. Intel's financial landscape. Despite its storied history, Intel has found itself in a precarious position. The company's financial situation has deteriorated significantly over the past few years. Although Intel planned to invest $26 billion in 2023 to try and turn its fortunes around, its operating cash flow had fallen dramatically from $36 billion in 2020 to just $9.7 billion. The semiconductor market has evolved, with many companies pivoting towards AI and GPU technologies, which has put additional strain on Intel's traditional business model. Analysts have pointed out that the geopolitical implications of Intel's struggles are significant, especially given the company's critical role in U.S. chip production. Perspectives on the buyout potential. The prospect of a buyout has been met with mixed reactions from industry experts. Some analysts believe that a merger or acquisition could provide Intel with the necessary resources and strategic direction to regain its competitive edge. Qualcomm, with its strong position in wireless technology and chip manufacturing, could potentially offer synergies that benefit both companies. Elon Musk, known for his bold and innovative business strategies, could also bring a fresh perspective to Intel's operations. His involvement in such a significant acquisition could signal a transformative phase for the company, aligning it with the rapidly evolving demands of the tech industry. Conclusion. As rumors swirl around a potential buyout involving Elon Musk and Qualcomm, Intel's stock has reacted positively, reflecting investor optimism regarding the company's future. However, the ongoing challenges facing Intel, combined with the uncertainty surrounding its leadership and market position, suggest that the road ahead will be complex. The semiconductor industry is in a state of flux, and Intel's ability to adapt to these changes will be crucial in determining whether it can leverage the potential buyout to reverse its fortunes. Investors and analysts alike will be closely monitoring developments as they unfold, eager to see if Intel can capitalize on this moment of speculation to secure a brighter future. The recent surge in Intel's stock price due to buyout rumors involving Elon Musk and Qualcomm has brought to light several counterintuitive aspects worth considering. 1. Market sentiment versus financial reality. Despite Intel stock jumping 9.25% amid buyout rumors, the company's financial health remains precarious. It has lost 69% of its stock value since April 2021 and is facing a significant decline in operating cash flow. This situation highlights a disconnect between market sentiment driven by speculative news and the underlying financial metrics that suggest a company in trouble. 2. Buyout rumors as a market catalyst. The fact that a mere rumor about a potential buyout can lead to a substantial increase in stock price underscores the irrationality that can sometimes pervade stock markets. Investors may react positively to speculative news without considering the broader strategic implications of such a buyout or the actual likelihood of its occurrence. 3. CEO resignation and stock performance. The resignation of Intel CEO Paul Gelsinger occurred concurrently with the stock surge, which typically would be seen as a negative indicator for a company. However, in this case, it seems to have fueled speculation about a buyout, leading to increased investor interest. This presents a counterintuitive scenario where bad news as CEO stepping down can paradoxically lead to good news, a rise in stock price due to investor speculation about potential new leadership and strategic direction. For geopolitical considerations, analysts have pointed out that Intel's failure could pose geopolitical risks due to its role in U.S. chip production. This situation reveals a counterintuitive perspective. A company's financial struggles and potential buyout could be viewed as a national security issue, which is unusual in the typical corporate buyout narrative focused solely on financial metrics and market share. 5. Shift from CPUs to GPUs. The broader industry trend of cloud computing companies moving from traditional CPUs to GPUs like those produced by Nvidia has severely impacted Intel. Yet, the buyout rumors seem to suggest a potential turnaround or reinvention for Intel, despite the fact that the shift in technology is ongoing and could undermine traditional chipmakers further. This juxtaposition illustrates how market narratives can sometimes overlook fundamental industry shifts. 6. Investment in future versus current performance. Intel's plan to invest $26 billion in 2023 despite its plummeting financial performance reflects a counterintuitive strategy. Typically, investors prefer companies that show solid returns on current investments rather than future promises, yet in this case there appears to be a willingness among investors to back Intel based on optimism surrounding potential restructuring and the possibility of a buyout. In summary, the situation surrounding Intel's stock price rise amid buyout rumors reveals a complex interplay of market psychology, investor speculation, and underlying financial realities that can contradict conventional wisdom about how stock prices should react to corporate news and performance metrics. The report regarding Intel's recent stock surge amid buyout rumors involving Elon Musk and Qualcomm emphasizes several critical points that are significant yet may be overlooked by many readers. Here are the important aspects of the report along with explanations of their significance. 1. Stock market reaction. Intel's stock rose by 9.25% following the buyout rumors. This immediate market response reflects investor sentiment and speculative confidence in the potential restructuring of the company. While many might see the stock jump as a straightforward reaction to rumors, it signifies deeper market dynamics and investor psychology. A significant stock price increase can indicate to other investors that there is optimism about future growth, which can lead to further investment and a self-fulfilling prophecy of rising stock prices. 2. Rumors and their sources. The report mentions that the rumors originated from observed jet movements linked to Qualcomm and GlobalFoundries at Trump's Mar-a-Lago resort. This connection suggests that high-profile meetings may have taken place, potentially involving strategic discussions about Intel's future. The significance of this point lies in the nature of corporate negotiations and how informal settings can lead to significant corporate decisions. The involvement of high-profile individuals like Musk adds to the credibility and intrigue of the rumors, which can amplify investor interest. 3. Intel's financial deterioration. Intel stock has dropped 69% since April 2021, and despite a planned investment of $26 billion in 2023. Its operating cash flow has plummeted from $36 billion to $9.7 billion. This financial context is crucial. It underscores the urgency of Intel's situation and the potential need for a buyout to stabilize its operations. Many investors might focus solely on the potential acquisition without considering the dire financial state that has prompted such speculation. Understanding this background is essential for assessing the viability of any acquisition and the potential risks involved. 4. Strategic shift in the semiconductor market. The report indicates a shift in the semiconductor industry where cloud companies are moving from Intel CPUs to GPUs from companies like Nvidia. This trend highlights Intel's struggles to adapt to changing market demands. The significance here is twofold. First, it illustrates the competitive landscape that Intel operates within, emphasizing the need for innovation and adaptation. Second, it signals to potential acquirers that Intel's core business model may need a fundamental overhaul, which could be a point of contention in any negotiation. 5. Leadership uncertainty. The resignation of Intel CEO Paul Gelsinger adds another layer of uncertainty to the company's situation. Leadership changes can significantly impact a company's strategic direction and investor confidence. Many might overlook this detail, but the CEO's departure can indicate internal turmoil or a shift in strategy that could affect ongoing negotiations or the company's operational stability. This uncertainty might make Intel a more attractive buyout target for companies looking to implement rapid changes or restructuring. 6. Geopolitical implications. The report mentions that Intel's failure could present geopolitical risks due to its role in U.S. chip production. This aspect is often overlooked but is crucial in the context of global supply chains and national security. The semiconductor industry is vital for technological advancement, and a strong domestic supplier is critical for the U.S. economy. Potential acquirers may be motivated not only by financial incentives but also by strategic interests in maintaining robust domestic chip manufacturing capabilities. 7. Long-term viability of the semiconductor industry. While the report focuses on Intel's immediate situation, it also touches on broader industry trends. The shift toward GPUs for cloud computing and AI applications signals a significant evolution in technology that could reshape the semiconductor landscape. This transformation is significant because it reflects ongoing trends that potential buyers must consider when evaluating Intel's long-term viability and the potential for growth post-acquisition. 8. Market speculation versus reality. Finally, the report highlights the distinction between market speculation and the underlying realities of Intel's business. While speculation can drive stock prices upward, it does not necessarily reflect the company's fundamentals. Investors should be cautious about making decisions based solely on rumors, as the actual outcomes may differ significantly from expectations. This point is particularly relevant for retail investors who may lack access to insider information and rely on market trends. Conclusion. In summary, while the report discusses Intel's stock surge amid buyout rumors, understanding the broader implications of these events, financial struggles, market dynamics, leadership changes, and geopolitical concerns, provides a richer context for interpreting the significance of these developments. These aspects are integral to grasping the potential future of Intel and the semiconductor industry as a whole, and they underscore the complexities that investors and stakeholders must navigate in a rapidly evolving technological landscape. 1. Market reaction and stock performance. The immediate impact of the buyout rumors on Intel's stock, which surged by 9.25%, indicates a strong market sentiment towards the potential acquisition. This reflects investor optimism and highlights the significance of strategic buyouts in the tech sector, particularly for companies facing financial difficulties like Intel. Analyzing the reasons behind this stock price increase can provide insights into market psychology and investor behavior in response to rumors and speculation. 2. Intel's financial challenges. Intel has seen a dramatic decline of 69% in stock value since April 2021, coupled with a significant drop in operating cash flow from $36 billion in 2020 to $9.7 billion. This financial distress underscores the challenges the company faces in adapting to a rapidly changing semiconductor market. A detailed exploration of Intel's financial strategies, investment plans, and operational adjustments in the context of declining market share could offer a comprehensive understanding of the company's current predicament and future prospects. 3. Potential industry consolidation. The involvement of major players like Qualcomm and Elon Musk in the buyout discussions highlights a trend towards consolidation within the semiconductor industry. As cloud computing companies shift away from traditional CPU models to GPU solutions, Intel's ability to innovate and capture market share becomes increasingly critical. Analyzing the competitive landscape, including the roles of key players and emerging technologies, can provide context for the potential outcomes of these acquisition discussions and their implications for the industry at large. For geopolitical implications, Intel's role in U.S. chip production positions it as a crucial player in the broader geopolitical landscape, especially amid rising concerns over technology supply chains and national security. The potential failure or success of Intel could have significant repercussions not only for the company but also for U.S. technological leadership. Examining the geopolitical ramifications of Intel's situation, particularly in relation to international competitors and domestic policies, can shed light on the strategic importance of semiconductor manufacturing in contemporary global affairs. 1. Facebook acquires WhatsApp. 2014. In February 2014, Facebook announced its acquisition of WhatsApp for approximately $19 billion, one of the largest tech acquisitions in history at the time. This move was aimed at expanding Facebook's messaging capabilities and user base. The deal significantly impacted both companies as WhatsApp continued to grow its user base independently while integrating more closely with Facebook's ecosystem. The acquisition raised concerns about privacy and data security, as WhatsApp's end-to-end encryption came under scrutiny in light of Facebook's data management practices. 2. Amazon acquires Whole Foods. 2017. In June 2017, Amazon announced its acquisition of Whole Foods Market for $13.7 billion, signaling Amazon's entry into the grocery business. This acquisition allowed Amazon to leverage Whole Foods' physical locations to enhance its grocery delivery services and expand its reach in the food retail sector. The move was seen as a significant disruption to the grocery industry, prompting traditional retailers to rethink their strategies. The acquisition also raised questions about the future of grocery shopping and the role of technology in food retailing. 3. Disney acquires Lucasfilm. 2012. In October 2012, the Walt Disney Company announced its acquisition of Lucasfilm for $4.05 billion. This acquisition included the rights to the Star Wars and Indiana Jones franchises, allowing Disney to expand its portfolio of intellectual properties significantly. The move was met with excitement from fans and raised expectations for new Star Wars films and related merchandise. Disney's acquisition strategy has since included leveraging Lucasfilm's content across various platforms, including theme parks and streaming services, demonstrating the potential for cross-media synergies in entertainment acquisitions. The recent surge in Intel's stock price amid buyout rumors involving industry titans such as Elon Musk and Qualcomm marks a significant moment for the semiconductor giant, which has been grappling with financial difficulties and a declining market presence. As we look to the future, several key predictions can be made regarding Intel's trajectory, the semiconductor industry, and the broader tech landscape. 1. Potential acquisition dynamics. As the rumors of a buyout gain traction, the likelihood of strategic acquisitions in the semiconductor sector is expected to increase. Companies like Qualcomm, which have a vested interest in expanding their portfolio, may pursue Intel to enhance their capabilities in chip design and manufacturing. This could lead to a series of mergers and acquisitions in the industry as companies seek to consolidate resources to remain competitive in an evolving market. 2. Restructuring and leadership changes. With the resignation of Intel's CEO Paul Gelsinger, the company is likely to undergo significant leadership and structural changes. A new CEO could bring fresh perspectives and strategies aimed at revitalizing Intel's operations. Investors will be keenly watching for announcements regarding new leadership and strategic direction, especially concerning Intel's foundry services and product development. 3. Focus on advanced technologies. As the semiconductor industry shifts towards advanced technologies such as AI, machine learning, and quantum computing, Intel may pivot its focus to these areas. Investments in R&D will be crucial to regain market share lost to companies like Nvidia, which have dominated the GPU space. Intel's ability to innovate and adapt to these technological trends will be key to its long-term viability. 4. Geopolitical considerations. The potential failure of a major U.S. chip manufacturer like Intel could have significant geopolitical implications. As the U.S. government emphasizes the importance of semiconductor manufacturing for national security, the survival of Intel becomes even more critical. Future policies may favor domestic production and innovation, potentially providing Intel with government support or incentives to bolster its manufacturing capabilities. 5. Market response and investor sentiment. The initial positive market reaction to the buyout rumors suggests that investor sentiment could remain optimistic if Intel successfully navigates its challenges. However, if negotiations falter or if the company fails to implement effective strategies, investor confidence could wane. The market will likely remain volatile, influenced by rumors and actual developments regarding the potential acquisition and Intel's financial health. 6. Competitive landscape evolution. The competitive landscape will continue to evolve, with companies like AMD, Nvidia, and emerging players challenging Intel's dominance. The shift towards specialized chips for AI and machine learning applications will intensify, requiring Intel to differentiate its offerings. Partnerships with other tech firms or research institutions may become essential for Intel to stay relevant in a rapidly changing market. 7. Long-term financial outlook. Intel's long-term financial outlook hinges on its ability to stabilize operations and return to profitability. The company's ongoing investment of $26 billion in 2023 is a significant step. But it must translate into tangible results in revenue growth and market share recovery. Financial analysts will closely monitor Intel's quarterly earnings and strategic initiatives to gauge its recovery trajectory. Conclusion. The future of Intel amid buyout rumors presents a complex landscape filled with opportunities and challenges. If the company can leverage potential acquisitions, restructure effectively, and pivot towards emerging technologies, it may not only survive but thrive in the semiconductor industry. However, failure to adapt could lead to diminished relevance, highlighting the need for strategic foresight and agility in a competitive environment. Ultimately, the unfolding events surrounding Intel will serve as a critical barometer for the semiconductor market and its integral role in the global tech ecosystem.